What's going on YouTube? Ben Chafee with Highstrike here. I also have Mr. Ben Zogby over my shoulder here working on some app development stuff for all of you. Today I just want to go over some of the most common beginner mistakes we see for our newcomers coming over to Highstrike, or even just people struggling on Instagram or Twitter, YouTube that reach out to us. First thing I want to talk about is trading backwards. You may have heard me and Mr. Zogby here talk about this on the Instagram page before. Something we see from beginners all the time just because they get so anxious during their trades. They're actually trading backwards. Of course, nobody is trying to lose money, but let's hop into the iPad here just so you can visualize a bit more what I'm talking about. So a lot of the time we see, a nice green trade. Beginner will enter, okay, entry was fine. They start getting super nervous because they have absolutely no plan, and they cut it as soon as they see some green right here. The stock goes on to continue to run, and they didn't let their winners run, and they leave all of this profit on the table. So what we would rather see them do is put together, all right, you entered, not a bad entry here. I want to see you put together a plan that you have your stop loss somewhere, whatever risking one is to you, and you are looking for your reward to be twice that. So I typically look for a 2-to-1 risk reward ratio for me personally in all of my trades. Now, obviously that does not mean I can just randomly pick spots on the stock and set a stop loss and my take profit. If I'm setting a stop loss at 1%, I can't just set a take profit 2% higher and just be like, oh, why didn't that work? I need to identify entries and my stop loss based on how the stock's moving. And I need to put together a solid plan for myself. The stock doesn't care about where your take profit or where your stop loss is. It cares about following patterns and using technical analysis to actually, identify and trap the stock in those patterns. So that's what we're talking about when we talk about trading backwards. Beginners are cutting their winners short because they get so nervous and just take profit the second they see green. So now we're going to talk about a red example here. Let me clear the iPad. And the reason why we call it trading backwards, because as I said, obviously nobody is ever trying to lose money. Please don't think I'm like, oh, beginner traders just have no clue what they're doing. Well, that is true in some sense. They're obviously not looking to lose money or doing this on purpose. Let's say they enter a red trade. We get one making lower highs, lower lows, and we eventually just tank, right? So let's say we enter similar to our green example. Entry, not bad, right? Like, it's okay. You need to take a risk if you want to see any sort of success. So we enter, right? You decide to take a risk and you've got your take profit somewhere, let's just call it like 3%, right? And you hop in with absolutely no stop loss and you're just watching this thing make lower low after lower low and eventually just falls way down here, right? So a lot of times beginners, they'll hold on to the stock this whole time we're falling to the downside here. And rather than having a short stop loss that we talked about, with our 2-to-1 risk reward ratio, rather than having a stop loss set, they'll just wait for things to turn around thinking, well, the stock has to come back up eventually, right? Not true at all. Obviously, there are some stocks out there like the S&P 500, index funds, ETFs that, if you did get in at a bad entry and you're holding long term, your risk is not too much there. If you were just randomly throwing money into options contracts or assets you have not done due diligence on, a whole lot of research, there's no guarantee that your losers are going to stop running to the downside. So that is something you need to understand. You need to learn how to let your winners run and cut your losers short. And that's what we call so many beginner traders trading backwards, doing the exact opposite. They're relying on hope for their losers to turn around rather than cutting them short. And they're cutting their winners so quickly just because they don't have much of a plan and they're so nervous to be in that trade. They just see green and immediately close the position. And when they see red, they're sitting there hoping for it to turn around for that red number to get smaller and smaller until it turns green, which is not always a guarantee it's going to happen. So one last thing I want to hit on that point is if you were in a position you ever are using the word hope, close it. I don't care if it's a small loss, big loss, whatever. If you were sitting there hoping for something to turn around or for something to, move to the downside or the upside, get out of that position. Hope will make you broke. There's no way around it. Stock market doesn't care about hope. You need to have a good plan for yourself. You cannot rely on hope. All right, that's all I'll say there for trading backwards. Now let's talk about scaling up too quickly. This is something we see a lot too. a trader might come in, have their first $1,000 day, which is super exciting. We never try to belittle anybody's accomplishments, whether it's, they made $10 to, we've seen members make 200 grand in one day. We always try to celebrate everybody's victories, and that, as you should. But understand, if you scale up too fast when you're not ready, if you don't have that proof of concept as a trader yet, guess what? You're gonna lose more money than you're willing to, also at a faster rate. So something I really love to teach all of our students, and something I was taught when I first joined Highstrike, is the rule of 30. So let's just go right here. So rule of 30 is you are going to aim for an average of 1% per day. So that's not going to be, let's say I have a $10,000 account. I'm not going to be making $100 every single day of the month. I might have some days when, I go up 5%, I go down 2%, I go up 0.5%, I go down 1%. We're looking for our average at the end of, I used to shoot for every month. Not everybody has to move at that pace, but I would shoot at the end of the month, at the end of 30 days, I would shoot for 30% growth on my account. And whether that took, sometimes it took 50 days, sometimes it took 20 days. Other times I'd go through, slow growth periods. It could take me as long as 100 days to hit that next level of 30% growth. But no matter what, I did not add more money to my account until I hit this 30% goal I had for myself. So a lot of people, if you haven't heard on the page or anything before, I was a student that started with $100 when I started my trading journey. I will gladly show you guys the screenshots and stuff of my first trade. If you check out my Instagram, it is there, the proof is there. But I started with $100. So I came into Highstrike trading looking to make $1 a day. That was it on average. And so many people kind of laughed at that, being like, how is that worth your time? Of course, $1 a day is not worth your time. That's not livable or anything. But I believed in the rule of 30, that if I could grow that $100 to $130, I could prove to myself that, hey, I have $1,000 in my checking account that I'm not doing anything with it for my part-time job at school. So if I could grow this to $130, I would allow myself to scale up to $1,000. Then I challenged myself to grow that to $1,300 in 30 days. To be perfectly honest with you guys, I don't remember if it took 30 days or 40 days when I did accomplish this, but I did it. From there, I allowed myself to add another $1,000, and I was looking to grow to $2,000 to $2,600. Now, obviously, this continues to compound. Not everybody's going to have, savings or checkings ready to go. So understand your scale up pace could be different. For me at the time though, I was working a co-op and a part-time job while I was in school. So I was making decent money for a college kid. So I was able to, scale up by typically $600, $700 at a time is what I would stick with myself. But understand you're going to be using your disposable income. We obviously don't want to see anybody put themselves in trouble savings wise or emergency fund wise, looking to scale up. But I do think the rule of 30 can be applied for every size trading account. Even if you're only adding $10 at the end of your 30% growth, you're allowing yourself to scale up. You're giving yourself some more funds, and you're gaining confidence in yourself because you're putting both financial effort and mindset effort into this skill of yours that you are actively building. And a lot of times, the more skin you put in the game, the more serious you get about it. I agree with that about everything. So the more I scaled up, the more serious I got with trading, obviously, because I cared about that money and didn't want to lose it. But I think, those small investments I was making after 40, 50, sometimes 20 days, it built my confidence more and more, because for me to take that money out of my checking account, put it into my trading account, I was telling myself, okay, I'm turning this into more money. Like, I'm not putting this here to lose it, right? Like, I believe in myself as a trader. So rule of 30 was a fantastic tool for me, and I really recommend it. For anybody looking to scale up, use this rule. It doesn't make you scale up too quickly. And just make sure you are only using, disposable income when you are scaling up. I don't want to see anybody get themselves in financial trouble there. All right, our third and final mistake I want to talk about, we see from a lot of beginners, is going to be over trading. So for me, I personally take, and I know Clayton agrees with this too, I'm at most taking 3 trades a day. This has been a rule I've had for myself pretty much ever since I got, over the $25,000 threshold and was able to get around the pattern day trade rule. So I do think everybody should put themselves on somewhat of a schedule when trading. I know full-time traders, people that are able to look at the market all day, this could be different from you. And to be honest, you're probably at a skill level that you don't need to be told when you should or shouldn't be trading. But for most of us that are working full-time jobs, or maybe that are new to trading, I really recommend taking 3 trades or less each day. If you are looking to take more to kind of get your reps in, please paper trade. I do think decision fatigue sets in right around that 3rd trade of the day, and obviously with decision fatigue comes worse decision making. So just obviously not as good plays. And you're probably looking to earn your money back at that point. So for me, like I said, 3 trades per day that's kind of my personal golden rule. I'm never taking more than that. And there are also a lot of days that I might take 0 trades in a day, and that is perfectly okay with me. I'm trying to run a business full time over here at Highstrike now. So sometimes if I'm not seeing opportunity for the market, I will put my energy into answering student questions and providing value, whether it be through content like this with YouTube, or answering student questions, maybe talking somebody through a tough trade they went through, or maybe they're going on a losing streak. I'll put my efforts back into helping them for the next few hours rather than sitting in front of the screen and stressing that I haven't taken a trade that day. And I think this is something that comes with more experience. I think every trader needs to come in with a disciplined mindset if you're going to be successful. So just be wary of that as you're coming in. Your number does not need to be 3, but I do think that is a pretty good threshold for most traders coming in. As I said, if you get more comfortable and see yourself becoming a full-time trader, I won't tell you what to do. I'll tell you stick with what works. But for those beginner traders coming at 3 trades a day, I really think that is a good number. So now for our friends that are held to the PDT rule, a lot of you might be thinking, well, how do I even overtrade if I'm only allowed to make 3 day trades in every 5 trading days? A lot of times what I will see, I recommend to a lot of our students, I used to like to trade under PDT. Let's just under PDT. I used to like to trade Monday, Wednesday, and Friday. And I would at most in this time, I would maybe allow myself to take 1 swing trade on the week. So obviously that wasn't a day trade. So this is what mine used to look like. It would be 1 swing trade with my 3 trades. So I'd be taking 4 trades a week at most. So for me, that's that mental, block I would put on to say if I made more than 4 trades in a week, it would kind of be like a slap on the wrist for myself. I would journal that. I would explain why I thought those opportunities were worth taking. A lot of times, I'm not gonna lie to you, when I broke this 4 trades a week, I typically lost on that 5th trade because once again, we talked about, decision fatigue. Your decision making is not going to be as strong if you have sent a mental block for yourself around 4 trades. When you get to that 5th trade, you're probably not going to be, either as focused, you might not be paying attention, or you could just be a little bit more carefree. You could be like, hey, I'm playing with profits. Who cares? I'm going to jump into this trade. That's typically when you'll lose. So just set a mental block for yourself. Like, as I said, whether it be 3 trades a day, if you're able to do so. If you're under the PDT rule on a margin account, maybe Monday, Wednesday, Friday, plus maybe 1 swing trade. If you're okay with that, if that's not your style, stay away from it. But just really set up some mental blocks for yourself and a schedule as well, just to start to instill that discipline you need to become a successful trader. Because as I said, over trading is where we see a ton of beginners kill their accounts. They're trying to do too much too fast. And that decision fatigue is just something they haven't really thought about much, that, hey, I might be less focused because I keep trying to do more and more. The reason you aren't seeing success is because you were trying to do too much. All right, everybody, I hope you found some value in this video. I know we talked about a good amount of stuff here, but feel free to hit us up with questions in the comments. Love to help you out. And check us out on Twitter and Instagram, and I'll see you over there in the next video.